ये दिल ना होता बेचारा, कदम ना होते आवारा, जो कोई अपना हो। No. हम सफर होता है, ये दिल ना होता बेचारा, कदम ना होते आवारा, जो कोई जो कोई खूबसूरत. What was it? What was it? I always forget the line. 1 second, folks. जो कोई अपना Hello, everybody. Good morning, everybody. Says Mr. Tarun. Good morning, Mr. Tarun. I am saying on behalf of everybody. So, if you could hear me, say something and we will begin. We will begin. But before that, I need to check Ye Dil Na Hota Bechara lyrics. I always get confused in that word. जो खूबसूरत कोई अपना हमसफर होता. Okay. जो खूबसूरत कोई अपना हमसफर. That's the song. I always get confused. Anyway, yes, that means we are good to go. Bum 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 bum. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We are having such a good time. This is the peak of human civilization. We are working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, and they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! Oh, but before we go, we gotta follow a tradition, right? You know the tradition. You know the sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a copper mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like hot water with some black pepper in it. And here we go. Oh my God. Healing. Let's do it again. Sublime. Sublime. You know what the simultaneous sip says, right? You know what it says? It says that you are not alone. It says that we are in this together. And that's such a beautiful thing to say. With that out of the way, let's begin. But before we begin, I need to correct a slight slip of tongue which I did yesterday. So I got a feedback from a viewer of Thinkers Frequency who said that, hey Nishant, while discussing the problems with the credit scene, you essentially mixed the retail credit and the business credit scene. So I said yesterday that retailers were facing a bit of a problem because bankers and financial institutions had essentially blocked uh, giving loans to people with multiple credit cards and multiple debts running at once, right? Now, this is accurate. Until now, we are accurate. We talked about how the bottom of the pyramid was giving delinquencies to the loan guys, and that was a problem. And in order to protect themselves for it, they basically checked out these people, and 22% of these people had some multiple loans running, and they blocked them out. And then they also essentially targeted geographies where default rates are high. Till here, we are fine. But then I ended up saying that a lot of businesses run these their inventory on debt and credit, and without these loans, it's gonna be a problem for the businesses, right? And that's gonna hurt the consumption story. So I essentially mixed loans to consumers and loans to businesses in one sentence. Now that story applies to loans to consumers only. Okay? Loans to consumers with multiple debts, with multiple cards, with multiple default rates, locations with high default rates have been curtailed by the banking sector. And those loans, the blocking of those loans is essentially leading to problems as far as the consumption story is considered. Those loans uh, are obviously, high delinquencies. But if those loans are cancelled, retailers are not being able to sell. Now, what happens when a credit card loan is taken to buy something, the personal loan thing, that people buy something on the credit card, sell it on cash, and then they just disappear, right? That's a scam. That's a new scam, or maybe a moderately old scam, where you buy something on a credit card, sell it on cash, and just disappear, right? So you essentially didn't pay anything, you sold the product, you make money, bank loses, right? That is a problem. Now, this has little to do with the loans given to retailers or small businesses. So this was a slight slip of tongue, miss of tongue. But yeah, thank you so much for the viewers of Thinkers Frequency who watch us so carefully and so minutely that even a little slip of tongue, which is, by the way, uh, in spirit right, but syntactically wrong, right? Uh, you help me correct, course correct very quickly. Thank you so much. With that out of the way, yesterday a news came out that Indian GDP expanded at 7.8% in the first quarter. That is April, May, June quarter. Okay, 7.8% growth as far as GDP is considered. A lot of economies grew. Uh, Chinese economy grew some 5.5%, Thai economy grew, and East Asian economies grew. But Indian economy grew essentially 7.8%, which is pretty amazing, right? 7.8% is a pretty amazing growth as far as quarterly sector is considered. Now, viewers of Thinkers Frequency, if you remember, uh, you know, like a month ago, we had said that the GDP estimates right now, they might just be looking at a pleasant surprise, right? Now, while we had anticipated that pleasant surprise to be happening in the next 2 quarters, that pleasant surprise has already hit us. And I know what regular viewers of Thinkers Frequency are thinking, that, oh, this must be the front loading of exports, right? Which led to the growth of GDP to 7.8%. Actually, it's not. Because April, May, June had no front loading issues at all, right? April, May, June didn't have those concerns. Those concerns hit us in August, right? So this is indeed a pretty good momentum for the country, and this has already started kicking in as far as even before the GST rationalization and everything that the government is trying to do. So we discussed how income tax as the reform tool, right, where they said 12 lakh rupee incomes will get no income tax essentially, right? Now that particular play uh, is responsible for some of this, but don't think of front loading as the cause, because front loading didn't hit. So a lot of it was responsible. I mean, the cause of it was public spend, right? Government capex, uh, government revenue expenditure, government capital expenditure, and so on and so forth. That really grew. Manufacturing grew at 7.7%. Services really flew, right? Services essentially grew over 9%. So, services, India is a services economy, and services really grew, and like put it up. So, public and administration expense 9.8%, finance realty 9.5, trade hotels 8.6, manufacturing 7.7, construction 7.6, agriculture 3.7. So obviously agriculture was not a part of this growth story, right? And fiscal deficit has grown to 30% till July. That means a lot of front loading of the government capex has already happened, which was expected because we discussed this. Viewers of Thinkers Frequency would remember, because during election times you cannot be doing a lot of government spending, right? And if you're not doing a lot of government spending, fiscal deficit doesn't happen, because fiscal deficit happens when the government is spending and it's not making it back, right? So this has grown to 30% till July, because a lot of those deferred expenditures happened right after elections, and that sort of led to. So fiscal deficit until July widened to 29.9 against 17.2 a year before, thanks to front loading of expenditure amid a contraction in the net tax mop up. So a lot of expenditures, but then this fiscal deficit is gonna taper off, because the government is not going to keep up the pace, and it's going to moderate, and then the fiscal deficit is going to basically on an annual basis be pretty much in the same range as usual. But for now, it's a bit of a problem. Now, speaking of problems, rupee has fallen 88 to 88 per dollar. Okay, 88 per dollar. That's where the rupee stands, and it only reversed when it touched 88.3. So the RBI intervened in its ways, and they tried to taper it off. But 88 per dollar. Now, do you know uh, the good news and the bad news as far as the whole rupee devaluation is concerned? Let's call it devaluation, right? What do you think is the good news, and what do you think is the bad news? Just think about it. You have like 10 seconds. What's the good news of rupee getting devalued, and what's the bad news? Nobody? So, the good news with rupee devaluation is that our exports become cheaper. So, devaluation is a strong word, but helps in cheaper exports, says Mr. Tarun. You are absolutely right. Devaluation is a strong word indeed, and I say it with full responsibility, because devaluation is what it is, right? If it goes from 83 to 88, that's about 7% of devaluation. So that means business, right? It is business. So Mr. Tarun is 100% right. It's cheaper exports. Cheaper exports make a country's exports competitive in the global scheme of things. You know how China essentially steamrolled the world? It basically devalued its currency. It devalued its currency so much that exports from the rest of the world basically became uncompetitive. right? That's what, if you watch Mr. Trump's interviews from 90s, like early 90s, even late 80s, early 90s, early 2000s, he says Chinese devaluation of currency has been ripping America off, right? Why? Because if your currency gets devalued, your exports become cheaper. If your exports become cheaper, everybody else goes out of business, right? That's the good news. The bad news is India doesn't export too much. India is basically an import dependent country. And that sentiment is essentially what Mr. Goyal said today. Yesterday, but it's reported today. So he said that don't worry, that these tariffs are not going to hurt us much because India is essentially an import dependent economy. Exports are very few. Total exports to US are like 2%, and of the economy, of the GDP, about which half of them are not tariffed. And then even with the ones who are tariffed, like gem and jewelry, they have 3 to 5% of value add, quote unquote. So does that mean he's throwing the gem and jewelry guys under the bus while doing everything he can? It certainly sounds like it. He said it's not a much of a problem because gem and jewelry extracts just 3 to 5% of value add. So that's going to be a bit of an issue if that's the government stance, because the ripple effects of these people getting fired are going to be much of a problem, right? So the coming to the bad news, we've already discussed. The lending also becomes a problem. The credit scene also becomes a problem, right? Dollar denominated debt becomes more expensive. Expensive sovereign loan, as Mr. Tarun says. That's a pretty accurate situation. Reading of the situation. Mr. Tarun comments, GEM is going from a 15 billion to 12 billion at present. Uh, I didn't understand what you mean by that, Mr. Tarun. 15 billion to 12 billion, is that what you mean? But 15 billion, gem and jewelry exports to US are like 10 billion, right? So that is a bit of a conundrum. But that's what's happening. With the tariffs on cards, indices have literally fallen out a little. They shed some value, right? Domestic Donald Trump's tariff offensive against India knocked the domestic stock market off balance, with key share indices notching up losses in shortened trading week. So that was expected. However, if you look at the stocks which didn't go down, defense was cool. Some consumption stocks were cool, and so on and so forth. So when everybody loses money, if you can save money or if you can make money, that's cool, right? What was that line from Margin Call which we keep repeating? You know why I make the big bucks? Because I can hear the music playing a day, a week, a month before everybody else, right? So this is obviously an issue. Shed nearly 2% in 4 day span, sentiment dampened, but GST too may lift spirits. So if you look at the consumption story of India, you know, uh, there's festive season, okay, that starts essentially from August, September, and lasts till January, December, January. So it's basically September, October, November, December, January, 5 months, right? And if you count a bit of August there, it's a 6 month window. Then there's this income tax filing as well, right? The financial year closing. That happens at March 31st, right? That's when the companies have to round up their books. So the country's consumption story essentially gets a 6 month boost, but in order to make it run throughout, you have some filings happening in the previous month so that something like keeps running, right? Now, as far as income tax slab is considered, when it got like a zero, net play, the government is looking at boosting consumption in some select months where that play happens, and with the GST thing, it's gonna hit the festive season the most. So as we've discussed, the most important part for the Indian economy right now is essentially how the festive season is going to play out. And while the economists are saying that we expect the GDP to essentially be in the 6.3 to 6.8% range, I think they are going to be pleasantly surprised with what happens in the next 6 months. So while everything is going on as far as US India tariff situation is considered, they have really created a perfect confluence or like a perfect set of events for this festive season to actually go pretty well, right? Moving on. Indian bulls, yeah. Government to guard industry against shocks from unilateral actions. Export diversification boost domestic demand to easing of GST structure. Well, we've talked a lot about this. What these people are talking about is Mr. Goel says that and Africa is a pretty big economy, somewhere around $88 billion worth of trading partnership happening with the entire Africa, right? They want to scale it up. They obviously want to import things from there, and they want to export more of auto to Africa, right? So gem and jewels, they said you can import here and so on and so forth. And they said you can take our auto exports. So by the way, Hero, Bajaj, TVS, these people are pretty big in Africa, right? Airtel and so on and so forth. So if you go to African countries, you're going to find a lot of Indian bikes and so on and so forth, right? Which is going to be very interesting. So what they're saying is that we are signing different bilateral agreements with, let's say, Africa, with Chile, with Peru, and all of these countries, right? South America, Africa, Europe, and so on. Basically, in a bid to alleviate the concerns of the industry, but at the same time, finance ministry is talking about uh, gem and jewelry exports not being that important because of value addition. Now that's pretty scary, and I think this is going to be a bit of a news in times to come. That what did you mean by that, right? What did you mean by that? Speaking of things that mean well, India and Japan, Mr. Modi and Mr. Uh, what's his? I'm sorry, I'm missing his name, but Japanese uh, premier name. One second. Japanese Prime Minister name. Shigeru Ishiba. Yeah. So Shigeru Ishiba and Prime Minister Modi are talking, and as we've discussed, the news cycle is regurgitating Japanese commitment to invest 10 trillion yen. 10 trillion yen is approximately $70 billion in India, $68.7 billion over a decade. So that's not a lot of money, about 7 billion a year. Right, and Mr. Modi is saying, Modi ji is saying that make in India for the world. He's saying that Japanese technology and Indian talent have the opportunity or have the potential to change the world. Now this is a pretty strategic sell, right? Because that's India's biggest problem. So if you notice how these things are communicated, it determines, it basically signifies what the country is really hoping for, right? Japanese technology and Indian talent. Basically, what they want is some absorption of the demographic surplus that we have. Let's say we have a lot of people, we have problems as far as skilling is considered, we have some problems as far as absorption of that talent is considered. But basically, it's a skilling problem, and skilling problem exists because there's no industry to absorb talent, right? Now, he's saying that if Japan whichever companies, Japanese companies have invested in Japan, most of them are looking at expansion, right? So we have a domestic market, which is pretty awesome, and we have the skilling. We have very cheap labor relatively, which you could use. Which until now, the only sell that India could have had was cheap labor, right? But now we've started talking about the domestic economy as a sell, uh, because of course, like $4.2 trillion, 60%, about 60, over 60% of Indian economy is basically consumption driven. So they've quoted numbers saying that about 75 to 80% of Japanese companies which had invested in India, they're looking at expanding. So, you could look at that. However, the sell has gotten diluted. Make in India for the world. It was a great sell. It was a great sell because US was allied with India. Because US was looking at importing like about $500 billion of stuff from India. Now that that doesn't happen, it's going to be a bit of a hassle to position India as a hub for exports for the world, because there's just one US, right? And that is a bit of a problem. So moving on. Center, by the way, India has taken a U-turn as far as Turkish aviation connection is considered. So if you remember, after Operation Sindoor, after India's fight with Pakistan, India was essentially looking at Turkish companies with a lot of suspicion. A lot of action was taken. Basically, Celebi was given the door. Celebi is the uh, on ground operations company which essentially handled the airport uh, you know operations, ground operations. They were replaced by, they were not given any extension. Adani came into the MRO business. uh, is it MRO? Yeah, but basically aircraft fleet maintenance and so on and so forth, right? Airport management. Now they've taken a U-turn as far as that place considered. Of course, Celebi is not in because that's a national strategic issue, security issue. But they had asked Indigo to not renew. They had just given a one-time 3-month extension for their ties with Turkish Airlines and even SpiceJet and so on and so forth. They said that you can't deal with these guys. However, that is history. They've renewed those terms. Now, why they have renewed those terms is it's a compromise, because Pakistani airspace cannot be used, and as far as Indo-Turkish airspace is considered, if these companies didn't essentially get those, those uh, what do I say? Those arrangements, basically it would have meant a win for the Turkish Airlines guys, right? So they helped the domestic airline carriers, which were Indigo and SpiceJet primarily, to work with these players, because if they didn't, these people would have lost out, which is exactly what these people were uh, lobbying for, right? They were asking the government to not stop this, because the A320s and A321s Airbus, they are small aircrafts, they have a range issue, right? So you needed these carriers from Turkey to essentially help them out in a particular way, right? So 3 months after vowing to cut Turkish connection in the Indian Aviation Center has started approving leasing pacts between Indian and Turkish airlines, signaling the reversal of stance taken under social media pressure. It wasn't social media pressure. I'd like to think that it was important, it was critical that the government essentially took national security in a more serious way. But yeah, if they're calling it social media pressure, so be it. But the point is, the government has reversed it to protect the domestic airline players. Now, this is also in continuation to an earlier story. Now, we talked about this, right? We talked about this. If you look at stories as individual units, you don't gain a lot of insight, right? How do you gain a lot of insight? You gain a lot of insight when you look at stories as streams, right? When you have sort of a historical perspective of how things evolve over the mid-term, long term, whatever you want to call it, right? Just yesterday or day before, I don't remember, we talked about, it was yesterday, we talked about how Indian airline companies were looking at a lot of losses this fiscal year because of whatever happened with, uh, you know, the whole Ahmedabad crash. Rest in peace, everybody involved. Uh, the airline industry was essentially looking at a lot of stress build up, right? And I told you that airline industry in general is a very fragile industry. It doesn't make a lot of money. Whatever money it makes during some course of time, it just gets demolished with bursts of something, right? That's what happens. I told you that even Indigo, if you look at the last 7 years of Indigo, you would find that it does not really make a lot of money. As much you'd expect, becoming the single largest 80% market share kind of a company, it's not as green as you'd like it to be, right? Now, if the government would have insisted on this particular play, an already flailing industry, an already flailing set of companies would have paid for it, right? And that wouldn't have been nice, which is why the government reversed it. So if you look at stories as streams, you gain a lot of insight because you see how things evolve, right? Uh, More Indians now putting their nest eggs in mutual fund basket. A lot of mutual fund investments happening by retail investors in India, right? There's basically it's a very interesting ratio which says the share of mutual funds in gross financial savings surged to 6% from less than 1% in FY12. So in FY12, share of mutual funds in gross financial savings of Indian households, like gross financial savings, mutual funds, right, was 1% in FY12. Now it's 6% in FY23, right? And you see how the governor was talking about uh, accelerating this trend, because this means that the retail investors, the normal people, the average people, were participating in nation building. Now, that's also a quote from before. The governor said it about 2 or 3 weeks ago, right? The ratio of assets under management for mutual fund industry to total deposits has more than doubled from around 10% in 2014 March to 24% in 2024. So ratio of total assets under management to total deposits. This is basically fixed deposits to mutual funds. Just 10% was the earlier ratio. Now it's 24%. So for every for every 7.6 rupees deposited in FDs, people are storing like 22.4 rupees in mutual funds, which is huge. A comment from Mr. Tiwari. Many investors say this about airlines, but airlines are there since a few decades now. Only airline insider might be making money. So there's a saying about airlines, Mr. Tiwari. It is that if you want to be a millionaire, okay, start as a billionaire and then start an airline, because airlines lose a lot of money, right? Airlines are there since a few decades. Only insiders may be making money. So it is a bit of a problem. Airlines have always been, a trouble as far as money, capital, return on capital is considered. So yeah, mutual fund story is pretty amazing. Retail investors participating in this particular play, 6% of household savings and 24% as a ratio of deposits. That's huge. Now remember these numbers, because this is what happens. This is essentially a big insight as far as where money is going, right? If 6% of household savings are going to mutual funds, right, and about 3x of this money, or 4x of this money is essentially getting saved, right? So 4x of this is basically 30% of the household savings are getting invested. As a thumb rule, you get the math, right? 6% of household savings going to mutual fund, right? About 4x of that, because right now the deposit to mutual fund ratio is 24%. So basically 4x of mutual funds are getting deposited, right? So that is essentially 24%, right? So 24 plus 6%, 30% is getting deposited and or invested in mutual funds. This is the household saving basket. This is gonna decide the household saving basket. This is what decides the consumption economy in general. Okay, a large part of it is gonna be loan. Then the rest of it's gonna be consumption. About some of it's going to be commodity consumption, which is the necessary consumption. Some of it is going to be discretionary consumption, which is where the GDP pulse comes from, right? So this is why I was talking about it. I hope you found it interesting. Let's move on. ONGC chief says, we'll keep buying Russian oil. We'll keep buying last drop of Russian oil. So, when political will allows, uh, corporate executives also display a lot of bravado, right? So he didn't have to say, we'll buy the last drop of Russian oil, but he thought it was, it was time to be poetic because the country was talking about Russian oil in that way, right? We're gonna buy the last oil last drop of Russian oil. Moving on. Vibe meets value. AI coding prompts multi-million dollar workflows. With Vibe coding taking root amongst India IT giants, AI code generators are competing for enterprise level biz in the $280 billion industry. Well, this is no surprise. Essentially, what they're talking about is that these software players, IT service players, are looking at uh, accelerating the adoption of AI amongst their workforce. So TCS has 6 lakh people, 1.5 lakh people, Infosys has 3 lakh people, and so on and so forth. So these people are essentially, these companies are making these their workforce equipped with AI, and that is looking at the workflow business getting rejuvenated, right? Now, Mr. Masa San had talked about uh, merging AI companies with these uh, the IT services company, the $280 billion play. Why that news didn't pan out as yet, but at the moment, this particular bit is happening at the mid market sector. So if you looked at the PE activity, a lot of AI companies are essentially, they have merged, they have acquired some mid-level IT companies, right? So this adoption is going on, competing for enterprise level biz in the $280 billion industry. Agent adoption, Wipro, HCL, TCS, and so on and so forth. Uh, 5.4 million workers are being employed by India's tech services. That's the number. Some comments. Mr. Raju Kumar says Indigo has done well in the last 3 years, made a profit of 15,000 crore in this year. Before this, they were losing money. Doesn't show this show good prospects? Oh, it does show good prospects, Mr. Raju Kumar. Mr. Kumar, Indigo is like the greatest company, perhaps across the world, airline company. Okay, it's been able to show profits. So if you look at last 3 years of Indigo, you say 15,000 crores, and in the last 2 years, 2 years before, they approximately lost just as much money or even more. Would you want me to check? Let me just check. So I had done this analysis. Let me just check for it 1 second, right? So if we are going a bit deeper as far as the whole numbers are considered, though we've talked about this. So here is the Indigo Airline PNL. Okay. In FY25, they essentially, no, sorry, 1 second. Yeah. So in FY20, no, 1 second, false alarm yet again. Yeah. So, okay. FY25, they made a net profit of 7.5 crores, 7,000 crores. FY24, 8,000 crores. FY23, minus 306 crores. FY22 minus 6,000 crores. FY21 minus 6,000 crores. FY20 minus 2,500 crores. So if you look at FY21, 20, 21, 22, and 23, you're basically looking at 7,000, 15,000 crores of losses, right? And then they made, in 2 years, they made 15,000 crores back. So, you be the judge. You be the judge. So 15,000 crores lost in the last 4 years, 20, 21, 22, 23. And then 24, 25, they made 15,000 crore back. How would you call the company? 8 years. That's 8 years. And that is the most successful airline in the world. You can say, many people would argue that Southwest Airlines is the most successful airline in the world, and they'd be right. But after Southwest, definitely Indigo is the play, right? And that's the condition of Indigo. So you can judge. Mr. Tiwari asks, but are the consumers getting the benefits of cheaper oil purchase? Cheaper oil purchase? Oh, okay. You're talking about the ONGC story. Well, they are getting, Mr. Tiwari, if you think about how the money flows, right? A lot of people criticize the government, saying, hey, if the fuel import is so cheap, why don't we get a discount on the petrol price, right? That's a very, very, and that's a fair argument, right? Indian petrol is not as cheap as we'd like it to be. Per capita, adjusting for per capita income, it's not cheap at all, right? But then, how do you get paid for it, right? Let's say if the petrol gets cheaper for the government saves a lot of money in tax. The government gave you like a free tax go till 12 lakh. That's how you pay for it. That's how you it became cheap for you. Then the GST purchases became cheap because of the rationalization. 12% GST goes to 5%, 28 goes to 18%, and so on and so forth. So it became cheap for you there. Yes, you're right. If the fuel becomes cheap, everything becomes cheap, because we talked about this, right? Logistics, is the road has the answers to everything. So if you reduce the cost of energy, everything becomes cheap directly. But indirectly, the consumers have gained because of whatever's been happening as far as the fuel import situation is considered. I hope I answered you well. Let's move on. Let's move on. So we've discussed a lot of this. Mm-hmm. 12 packs, India and Japan. We talked about this. A lot of political chit chat, which we do so well, by ignoring. We cover the political chit chat so well by just ignoring it. You realize this? The best thing you can do as far as analyzing Indian politics is just ignore it, right? Just ignore it. Look at the numbers, and you'll figure out that it doesn't matter. All these people keep talking about, right? Okay. GST reforms festive season may spur demand, says CEA. Well, Thinkers Frequency has been saying that for a very long time. So not an insight. Moving on. Centre's fiscal deficit until July widens to 29.9% of FY26 target. Front-loaded capital spending, weak net tax collections, widen fiscal deficit to 4.68 lakh crores. We've talked about this. It's gonna mellow out because of. I watched some political news on TV channel. Instant regret, says Mr. Tiwari. No, we did this very well. So my brother advised me that, hey, don't cover politics at all. In fact, we talked, Mr. Patil, Mr. Tiwari, I remember a lot of regular viewers of Thinkers Frequency said that do not think about politics, which turned out to be such a good news, right? Because our focus, the insights that we've been able to gather, they've just been amazing. And politics is far more complicated than the world of business anyway, right? So maybe we are not that smart to actually be able to understand politics. What we can do is just understand numbers, which is fine enough, right? Moving on. Reliance bets big on green energy with mega solar and hydrogen moves. So Geo Platforms basically is gonna IPO next year, early next year. It's gonna be the biggest IPO. Geo is essentially, it's gonna be a $150 billion company, which sounds big, which is big. But Starbucks is also a $150 billion company. McDonald's is a $220 billion company. So just putting it in perspective, it's a very big company for India, but globally, it's fine, right? So they're betting big on solar. Speaking of solar, China is such a big force in the solar industry play that in 2030, by 2030, China will be making more solar energy than the entire energy consumption of US, right? And they might just be able to reach that play early. So they might just early deliver that particular milestone. Just Chinese solar energy more than the entire energy consumption in US. How does that sound? That's a pretty big deal, right? But by the way, Reliance is betting big on green energy and hydrogen energy. Green hydrogen is obviously a very big, important part of the puzzle. So they say that they're going to bring down the green hydrogen cost of making to less than $1 per kg, which will a price point that will unlock industrial adoption and make India a global hub for green hydrogen and its derivatives. So 3 million tons being provided, being targeted by 2032. Speaking of solar, uh, you know, ramping up solar manufacturing at Jamnagar, we have successfully produced a first 200 megawatt of HJT. HJT is heterojunction module. These deliver 10% higher yield, 20% better temperature performance, 25% lower degradation. Capacity will expand to 10 gigawatts, scaling to 20, making it the largest integrated solar site globally. So, largest integrated solar site globally at Jamnagar, hydrogen, and so on and so forth, right? From oil to clean energies. They're saying that we're going to be using oil, and we are going to be building for the future. And they have a lot of tech companies investing in them, right? Google, Facebook, Meta, they have invested in Reliance. So they're going to be very happy with what happens as far as the whole geo play is considered. So, by the way, Reliance Retail, it's going to invest 40,000 crores in the food parks. So Reliance Consumer is really kicking it. It's kicking it like nobody else, right? We've talked a lot about how Reliance has invested in Campa, has invested in a lot of consumer brands. They're looking at consumer brands left, right, and center. They really believe in this business, which is also a very good sign, by the way, for the consumption play. If Reliance, a company like Reliance doesn't take risk, they're an oil company, for God's sake, right? They are basically an oil player, and they invest in a lot of in predictable businesses. So if you look at when they entered the telecom industry, they entered the telecom industry when it was in dire straits, right? It was every telecom player was in debt, every telecom player was so strained, and that's when they entered telecom, and essentially everybody folded when they came, right? So now if they're investing in the consumption play so much, the consumer FMCG play, you can expect something good to be happening in that direction. Moving on, we talked about the government U-turn on the Turkish aviation sector. SpiceJet plans to lease 5 Boeing 737 players from a subsidiary of Turkish carrier. Right? Indigo has sought a 6-month extension of its lease, but now it's gonna get it. Okay. In their language, government officials said that the approvals were given to safeguard the interest of homegrown airlines, which we've already talked. Indigo said that due to the airspace closure, they were unable to operate to Istanbul with Airbus 320 and 321 jets, limited range. That would have rendered the India-Turkey route to completely dominated by Turkish airlines. We've talked about this. I just wanted to confirm if I'm missing out on anything. I'm not. We don't miss out on anything, right? Passenger vehicle sales may grow 1 to 4% this fiscal year, says ICRA. Well, we've also talked about how passenger vehicle sales might just actually grow even more than 5%, right? We talked about the GST slab going to help the small cars, and if small cars sell more, we're going to see some positive action as far as the whole industry is considered. Moving on. A run from the USA. Indians seeing it getting hard for them to study. Mr. Tiwari says, even after a decade of Reliance transformation from oil to geo, Reliance is still being called an oil company. Well, if you look at Reliance balance sheet, let's say Reliance Retail is a 3 lakh crore play, right? 3 lakh crore revenue, Reliance Retail. That's the entire retail, by the way, right? Geo is, what is Geo's revenue stream? It's basically quarterly revenue of, how much is Geo's revenue? I don't want to look it up. I want to actually figure it out, right? Geo has like 500 million subscribers right now. 500 million subscribers at an ARPU. Geo's ARPU is about 130, 150. It should be in that range, right? Not that much. So 500 million people paying 150 rupees. So 500 million people, 150 rupees is what? Uh, $2. So $2, 500 million people. That's monthly, right? So $2, 500 million people. That's $1 billion per month, right? Quarterly, it should be 24,000 crores. So essentially $12 billion. Now let's check what Geo's revenue is. Okay, Geo revenue 2025. Geo's financial performance. Geo's revenue stood at 11 lakh crore, growing 17% year on year. 1 second. 500 million people. 1 second, just let me check. Geo revenue in India per month. Okay, so quarter is 30,000 crores. So I was exactly right. I was exactly right. Did you look at that, by the way? I said $2 billion. That's sorry, $1 billion. That's 8,000 crores, and they did 10,000 crores. So ARPU, right from ARPU to the number of customers to it's just 100% right. They did 30,000 crores of revenue in the last quarter. That's 10,000 crore a month. That's exactly what we had calculated. This is the beauty of thinker's frequency, right? If we are watching regularly, if we are doing it regularly, this is how tight we can be with numbers, right? We don't even need to know numbers. We can derive numbers, and they'd be so accurate that it's gonna be amazing, right? So anyway, moving on. So if you look at that, and now that compare it to the oil play that they have, you'll know, Mr. Tiwari, that why they are called the oil company, right? So that's what happened, right? When Mr. Mukesh Ambani and Mr. Anil Ambani got split up, right? Mr. Mukesh Ambani got the oil and this, and Mr. Anil Ambani got these telecom play, right? At that moment itself, well, I was very little back then. Their split happened. When did their split happen? It happened like 2006, 8. I was not big enough to know the ramifications of it then, but as I read, I knew that Mr. Ambani, Mr. Anil Ambani, was given a very shitty deal. He got the debt, and that guy got the cash, right? So, Mr. Ambani, Mukesh Ambani did very well as far as that split is considered. So, one guy got the debt, and one guy got the cash. Moving on. Dream 11 is out of BCCI's sponsorship, which is not a surprise anymore. Dream 11 is out, and they're going to look at the next person who comes to sponsor. But, it's a very bad omen, it seems. You know who was funding BCCI before Dream 11? Who was the company which was the chief sponsor, the jersey sponsor? It was Byju's. So it was first Byju's, then was Dream 11. Both the companies are essentially out, right? Who's going to be the next one? Who's going to take this particular risk? What do you think? Huh? Mr. Kumar says Byju's. Yes. So Byju's, then Dream 11. Who is next, right? Or maybe third time's the charm, who knows? But yeah, scary place to be it, right? Moving on. Jio adds most number of users. Vodafone, biggest loser. Vodafone, MTNL, BSNL, perpetual fire trucks, right? Dumpster fire trucks. Never make money, always in the news for something wrong, something bad. Always draining the whole telecom play, which is, and there's no hope either, right? It's just a futile exercise. Speaking of hope, Oyo has got its IPO bid okayed. So Oyo submitted its bid. SoftBank turned it down, and SoftBank said that hey, you got to improve your financial, then you could look at an IPO. And Oyo has gotten the approval from the board. That means SoftBank has okayed the IPO. It's going to be a $7 to $8 billion IPO. And Oyo is perhaps the most shady company that has ever come out of the Indian startup ecosystem. Ola and Oyo, both of these are very close in that play, but Oyo is just next level. Oyo's entire business has been essentially a fraud. It's been a fraud. The company has grown as a fraud, and it's grown from strength to strength as a fraud, and it's been the luckiest company also as far as the whole Indian ecosystem is concerned. It's probably been the destiny's child, right? I'll tell you how. So Oyo was began as a marketplace. Okay, it started raising a lot of money. Nobody knew why. It was competing with a company called Zorooms, and then there was a company called Stayzilla, and all of these people, these three people were looking at the hospitality sector. Oyo and Zo essentially managed those places. They had some sort of operational control. Stayzilla was a pure play listing player, right? They raised a lot of money, and then they said that, hey, this marketplace is a bad thing because we're not being able to manage, and so on and so forth. So let's do inventory. So they essentially became an inventory player. Now, when they became an inventory player, things got even worse, because God knows who gave them the idea that it's even possible, or it's feasible to operate a small mom and pop hotel at a standard across the length and breadth of the country, when five stars are not being able to do that, because it's essentially a people's play. Right now, Oyo is an absolutely people's play. It's a hotel service operation. It's not a tech company. There's no tech whatsoever. Ticketing was also already solved. So it became an inventory led company. Now, after it became an inventory led company, it started losing money, hemorrhaging money left, right, and center. It was essentially just a scam, right? But then came COVID, and then it just killed its inventory business. It just invoked force majeure. Force majeure is basically a clause in an agreement where it says if an act of God happens, that's not covered under the agreement. So it escaped all of its agreements, all of its liabilities to its hotel's partners, and just went, back to being a marketplace and operator. Now, then, Oyo essentially was valued at 6 to 7 billion back in 2017 or 18 at its last fundraise. What Ritesh Agrawal did was he took a loan, okay, and he bought the shares of the investors of this company to raise its stakeholding, right? That was the sell, that the founder is buying shares back to raise its shareholding. So he took that loan, and that loan was guaranteed by SoftBank, which was also the largest shareholder, right? So essentially, SoftBank guaranteed a loan, so that which enabled Ritesh Agrawal to buy all the investors' shares at an inflated valuation. So they just pumped up the valuation to $10 billion basis this transaction. Like, this is an in-party transaction, right? SoftBank took a loan. SoftBank is guaranteeing a loan which this guy has taken to buy other people's share in his own company, and this loan is guaranteed by SoftBank, which is already the largest shareholder, right? So you get the idea. After this transaction, they tried to IPO the company for $12 billion in $12 billion in the retail market. Fortunately for retail investors, they couldn't IPO because the market conditions became a little bad. They revised that IPO to $9 billion. Okay. Still something happened. They cancelled the IPO. Then company went through a lot of rigmarole. A lot of money was lost. A lot of books were cooked. They came to the IPO market again at a $6 billion valuation. Okay. 12 billion, 9 billion, 6 billion. Now, $6 billion valuation, again the market fell apart. They cancelled the IPO. And then the company was in dire straits. It didn't have money to survive. It was just a fire truck, right? It went to the Indian family offices raising $2 million checks at a $2.5 billion valuation. So in 2019, they valued themselves at 10 billion, went to the retail market at 12 billion, 9 billion, 6 billion, came to the retail office, the Indian family offices to get $2 million checks at a $2.5 billion valuation. That's what they did, right? Then they took another loan to buy the G6 motels, right? The American G6 chain. Now, that particular chain they bought on leverage. Now, this is corporate debt. Now, these people have to IPO by the end of this year because the earlier loan that they had taken, the payment time has come. And also, the G6 loan, it has a lot of payment to pay, right? And if they fail to IPO right now, if something happens to the market tomorrow, you know what's going to happen? They'll not be able to pay the interest on the previous loans, and Ritesh Agrawal will lose the shareholding, and SoftBank will have to take on the shares, and Ritesh Agrawal will exit, right? And these people, the company will have to sell the G6 Hospitality, the US chain which they have bought, and that's it. So right now, all the money that they are making is coming from the G6 Hospitality. So they're not even an Indian hospitality company. They're not, forget about being a tech company. That's how they began, right? They were a tech company in hospitality. Forget about that. They're not even an Indian hotel company. They did a leverage buyout of G6. That's where the money is coming from. So out and out fraud. This company is just a murder of common sense, but it's gonna IPO. I think it's gonna be lucky. Somebody who has been this lucky all this while, they might just have a $7 to $8 billion IPO. Now, even if they do have this IPO, problems won't be solved because the loan they took back in 2019, that was taken at a very much inflated valuation, right? So they're gonna be losing out some money, but at least they'll survive, right? That's what matters. But as they survived, what are they? A shitty hotels company. So what did you get after investing, let's say, like 20-30,000 crores in a company? Did you see a revolution as far as the Indian hospitality play is considered? No. You're still booking by Make My Trip. You're still booking. Oyo is a shitty hotels company which was used as a Chadar Badlu hotel. It's called a Chadar Badlu hotel where people are essentially using it for hourly purposes, if you know what I mean. So that's what you get after investing like 20-30,000 crores in a company. But now it's going to go IPO and making its money outside. So all I can take from this is if a big shot backs up Nishant, he will go short for sure. Will I go short on Oyo at a $7 billion valuation? I'll have to check, Mr. Tiwari. I'm very careful with my shots, you know that, right? I'm very careful with my positions. So I'll have to do the math, right? Moving on. Economists see slow growth, US, stubborn inflation well into 2026. Well, economists have been wrong about the US economy. And it can be wrong now, even now. So the US economy surprised people with its quarterly report, 3.3%. And let's see what happens with this particular play. Speaking of which, Oyo, when I look at Oyo's story, and when I talk to Sanjeev Bichandani sir, we talked a lot about, it's going to be a viral bit. So let me not spoil it, right? Let's wait for the episodes, you're going to see something. And then when it's released, I'm going to draw a parallel between Oyo and what he talks about. Moving on. US and China waiver for Samsung, SK, Hynix and Intel. These companies building in China. They could have used US equipment, which is now getting the waiver off. World Bank taps 510 million through emerging market loan bonds. Now this is CDO. These loans are based out of loans given to the emerging markets. 510, this has become a bond. Something like a CDO, collateral debt obligation. This is collateral loan obligation. It's called CLO, right? So World Bank is selling 500 million of these. You know how this party ended, right? But this is not everything is same. No analogy thinking for us, but it's pretty interesting. Moving on, and profit sinks 60% on AI push. Companies spending a lot on AI, but only Nvidia is making all the money. Moving on. US approves $825 million worth of missile sales to Ukraine. As I said yesterday, what US has started doing is monetizing a problem. So instead of giving money to Ukraine, like US sent like $120 billion, $150 billion during Biden administration, it's not giving money anymore. It's selling, you know, it's selling equipment, and Europe is paying for it. So it's interesting play of things. Trump blocks 4.9 billion in foreign aid. They've also blocked foreign aid, and the way they've blocked foreign aid is pretty interesting. They've used something called a tool where they bring it up in the last days of the session, so the Congress doesn't have 45 days to reject the play, and thus it goes away. So the last person to do that was Jimmy Carter. So it's called pocket rescission for the first time in nearly 50 years. That's when a president submits a request to Congress to not spend approved funds towards the end of the year, fiscal year, so that Congress cannot act on the request in the 45-day period, right? And then basically they don't spend money. Jimmy Carter used that, but Jimmy Carter is perhaps one of the most failed presidents of United States in a very long time. So let's see how that pans out. We've talked about rupee. We've talked about Ola. Stock is up. I suspect foul play. Whatever the Ola does, my usual reaction is foul play. Right? And I sort of saw it, right? So when I went to Twitter, I started seeing a lot of Twitter tweets with hashtags Ola stock going to the moon, Ola stock going to the moon, and it was like a campaign, right? It basically became trending or something. Now that gave me an idea. Is this organic for Ola? Is it possible that this is organic? Now Ether had the similar stock up, right? But Ether didn't have any of such campaigns going on Twitter. Does that mean that Mr. Bhavish Agrawal is essentially engaging some sort of punters to pull his stock up to create a perception of growth? Very possible. Very possible. Anything shady and Ola, it just instantly makes sense, right? Moving on. Gold loans have all the shine. All other segments pale a bit. Well, we've talked about this. Gold has been rising, and gold will rise as geopolitical instability rise, as macroeconomic instability rises. So gold is up. With gold going up, what happens? Gold loans go up. Muthoot Finance has like a 2 lakh crore gold play going on, which is not surprising to us. With that, by the way, all other loans are not that green right now. With that, we come to the end of the 97th episode. 97th episode of Thinker's Frequency. Right? It's 9/11. I was almost I woke up with I thought I was under the weather. I felt weak. I felt a little not that great. I thought, oh, today's episode is gonna be a bit of a hassle. But we will not be defeated, right? And we ended up doing the 97th episode. I hope you liked it. I hope you found it fun. I liked it, of course. I love talking about this with Mr. Tarun. Mr. Tarun, your insights are getting crazier. Mr. Tiwari, great questions. Mr. Kumar, and everybody else who watched. I hope you had fun. I hope you liked it. I hope you have a beautiful day personally and professionally. I'll see you tomorrow, same place, same time, hopefully. 97th episode. Means a lot. And yeah, that's all I have to say, right? Do I say anything else? Yeah, that's it. Bye-bye, folks. Cheers.